Interest rates have been very low for a long time here in the United States, but today a worrying sign for Arizonans and those across the country as the Federal Reserve raised interest rates by 0.75%.
Yeah, that's the largest increase by the Reserve in a single meeting since 1994. Elliot's on the story. He's live in the newsroom with how this news impacts Arizonans moving forward. Elliot.
Yetta and Jamie, this federal rate hike comes as inflation has been on the rise and countless Arizonans have been priced out of the state's housing market. It's leading some to rethink their short-term financial approach and play the waiting game when it comes to making some long-term money moves.
Larger than we were expecting a week ago.
Mike Ward anticipated that the Federal Reserve would raise interest rates. But by raising them 0.75% instead of 0.5%, the True West Credit Union CFO sees many Arizonans in for a rude awakening the next time they check their bank statement.
Depending on what your debt level is, that can be significant. That could be, $200-300 to an individual.
Ward recommends quickly paying off as much debt as possible on variable rate products like credit cards and saving at least 6 months worth of cash for day-to-day purchases. While Ward says spending less on non-essential expenses can help offset some of the money lost due to higher interest rates, Valley real estate agent Kristen Graziano says that approach doesn't necessarily apply to buying a home in this market.
A lot of times when people are fearful of the market and what's happening, you have less competition. So it's actually a really good time to jump in and buy a house.
On the other hand, when it comes to selling a home, Graziano says a little patience with rising rates can go a long way towards getting the most bang for your buck.
If someone is thinking of selling and they don't need to do it right now, I mean, honestly, if it's my property, I would probably wait until the spring.
This sharp rise in interest rates is likely only the latest step in a steady long-term increase by the Federal Reserve. Both Graziano and Ward say it's important for Arizonans to take that into account for future finances.
But today's rate hike, what they could afford yesterday is different than what they can afford tomorrow.
By the end of the year, they could see, upwards of 4% additional interest rate costs associated with their debt.
The rates could change again as early as next month, and between now and the rest of the year, the latest economic projections expect interest rates to roughly double. Live in the newsroom, Elliot Polikoff, Arizona's fan.
Elliot, thank you.